The accounting information should be presented in such a way that here the users of the accounting information has to depend on that in order to take the right decisions. Accountant should present the comparable information in the most intelligible manner without sacrificing relevance as well as reliability. There are two types of transaction. One is cash transaction, other one is credit transaction. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 5th session of Unit 1 of the subject Fundamentals of Business Accounting, and this is for first sem B.B.A student, and the Unit 1 is all about Introduction to Financial Accounting. So already we have discussed few of the concepts, so let us quickly recall what we have discussed in a previous session. So in a previous session, I have covered this topic, that is, we have discussed about advantages of accounting as well as disadvantages of accounting. So we have already learned how this accounting is advantageous as well as disadvantageous. In today's session, we shall continue with a new concept, that is qualitative characteristics of accounting information. So my dear students, as we all know, so after preparing our accounts, so the final results has to be communicated to the users, that is accounting users. So they may be internal users or external users. So already in the previous session, we have learnt about who are the internal users as well as external users of accounting information. Now let us see what are the qualities. So how the accounting information should be. Of course, it is very essential that it has to be communicated to the users so that it should have certain good characteristics. Let us see what are the characteristics that the accounting information should have. Now coming to the first one, that is reliability. Now what I mean by reliability, here the accounting information should be presented in such a way that here the users of the accounting information has to depend on that in order to take the right decisions, or in order to conduct any of the business activity, the accounting information has to be dependent. So here the user has to depend on accounting information while taking any of the decisions. So reliability means the users must be able to depend. So they have to depend on the accounting information. So based on the accounting information, proper decisions have to be taken. The reliability of accounting information is determined by the degree of correspondence between what the information conveys about the transactions or events that are occurred, measured as well as displayed. So whatever the transactions that have taken place in an organization, the whole summary will be the accounting results. So the accounting results should be conveyed in such a way that here it has to be understandable. At the same time, here the user has to depend on accounting information in order to take the right decisions. A reliable information should be free from error. Of course, based on the accounting information, major decisions can be taken by the users, so that the accounting information should be free from errors. In the sense, it should be accurate in nature and bias and faithfully represent what is meant to represent. Now, actual accounting information has to be conveyed to the users so that based on that, the users will take appropriate decisions. To ensure reliability, the information disclosed must be credible, verifiable by the independent parties, use the same method of measuring, and the neutral as well as faithful. Now, in order to make the accounting information more dependable, so what it has to do? Of course, accuracy should always be there. At the same time, the accountant has to make sure that whatever the accounting information he has got, that has to be communicated to the users. So he has to recheck that. So an authorized person has to be selected where he has to go through each and every accounting activity, so that in order to know whether the accounting information is correct or not, because it is reliable in nature, because based on that many appropriate decisions will be taken. So the first characteristics is that reliability. Now coming to the second one, relevance. It's not just that it should be in such a way that the user will depend on the information. On the other hand, the information has to be provided in a proper time. So when the user need the information, during that time itself the accounting information has to be ready and that has to be communicated to the users. So to be relevant, information must be available in time. So it should be available in time, in the sense whenever the user demands the accounting information, so it should be ready and thereby it has to be conveyed to the users. Must help in prediction as well as feedback. So the accounting information should be able to predict the proper decisions. At the same time, a feedback should also be given and must influence the decisions of the users. So it should also be able to take proper decisions. So here what you have to remember, relevance is nothing but accounting information should be available in proper time whenever the user demands. At the same time, it should be in such a way that the user can take the appropriate decisions. So it helps them from prediction about the outcomes of the past, present or future events. So how the accounting information should be? So it should be in such a way that where the user can predict about the results of the past, present as well as future. So he can forecast the results about the future also. Next one is confirming or correct their past evaluations. So here I have told you, based on the accounting information, so they will be able to compare from one year to another year. So here also it should be relevance in nature, where from time to time it is able to compare the results. So when the accounting information are available in a proper time, when the user demands, then he will be able to compare with the past situations, that is past result with that of the current result. Now coming to the third one, understandability. Now how the accounting information will be understood by the users. So it should be understandable in such a way that how the accountant or how the accountant who have prepared this accounting information, so on what basis he has prepared, on the same basis the user have to understand the information, or user should be able to understand the information. Then only accounting information will be conveyed properly to the users. Now what do you mean by understandability? Understandability means decisions maker. So here decision maker is nothing but the users of accounting information must interpret accounting information in the same sense as it is prepared and conveyed to them. So how the accountant has prepared or how the accountant have presented the accounting information, on what sense, in the same sense the user have to understand the accounting information. Then only we can tell that the accounting information have been properly understood by the users. A message is said to be effectively communicated when it is interpreted by the receiver of the message in the same sense which the sender has sent them. So here when a proper communication happen, so if I tell you something, so if I explain you about a particular concept, on what sense I have explained, on the same sense you have to understand that. Then only we can tell that information has been properly communicated. So communication is nothing but what? So the whatever the information which is being conveyed, so it has to be properly accepted by the user in the same sense. So how the sender sends, in the same sense the acceptor have to receive the information. Then only a proper communication takes place. So accountant should present the comparable information in the most intelligible manner without sacrificing relevance as well as reliability. So it has to be communicated in such a way that, so without this or without sacrificing relevance. So relevance means what? So here it has to be available on time and at the same time reliability. So reliable in the sense the user have to depend on accounting information. So when he will depend on the accounting information? When the information is accurate. So Here what you have to remember, understandability in the sense the accounting information has to be conveyed in the same sense how the sender sends, in the same sense the acceptor have to receive the accounting information. So here the conveying of the message is very important. So here they have to keep the importance of relevance also. So relevance in the sense it has to be conveyed in the right time, and here reliability also should be there because the user have to depend on the accounting information in order to take the proper decisions. Next, fourth characteristics is that comparability. Of course, the accounting information should be comparable in nature, where the results of the last year should be compared with the current year and the current year results should be compared with the next year. Or if you take 10 years, so each 10 years results should be comparable in nature. So comparable from one year to another year. So it is not sufficient that the financial information is relevant, that is available in time, and reliable, that is the user have to depend on the information when the information is accurate at a particular time in a particular circumstances or for a particular reporting entity. So these only not the characteristics of accounting information, but the accounting information should be comparable in nature. But it is equally important that the users of the general purpose financial reports are able to compare. So here they are able to compare the various aspects of the entity over different time period and with other entities also. Now, as I have already told you, the accounting information should be in such a way that the accounting results has to be compared from one year to another year and from one entity to another entity. Is nothing but of the same nature. So there are a number of organizations which are conducting business of the same nature. Then in order to know their competitors, the accounting results has to be compared with the other entity. So the organization have to know who are their competitor. So depending upon the profitability, they have to know what is their position in the market. So how they are compared with the other entities. To be comparable, accounting reports must belong to a common period. So it should belong to a common period. Suppose if the organization wants to check the profitability in the year 2021, then 2021 has to be taken as a common year and the comparison between the two organizations. So let us take A and B. So the comparison of profitability of A and B in 2021 has to be compared. So we cannot take A in the year or the profitability of A of 2020 with that of B or profitability of B in the year 2021. So this will not happen. So if we are going to compare, so we have to take the same year and the organization have to conduct similar kind of business activity. So they have to undertake similar kind of business activity and the comparison will take place or comparison should happen. And the common unit of measurement and format of reporting. So here a common unit should be there. So whether they are going to see the profitability or whether they are going to see just the sale of both the organization, so a proper unit has to be measured here. So these are all the characteristics of or the qualitative characteristics of accounting information. Now moving on to the next concept, that is basic terms in accounting. So let us see, already we have discussed or already you have studied in the PUC where you have learnt about certain basic terms. So let us go through or let us recall those terms what are used in financial accounting. So coming to the first term, that is entity. So entity is nothing but we are going to speak about the organization or a business entity. Now let us see what is this entity. So entity means a reality that has a definite individual existence. So here entity in accounting means which has some individual existence. For example, if I tell about Mahalakshmi Sweets, of course it is an entity where it has some individual existence. Suppose I can just imagine that A Limited, but whether we have A Limited, no, we are just imagining it as an organization, that is A Limited. Suppose if you are going to speak about Infosys, So, we are all familiar about the Infosys because it has some individual existence. So, like that, an individual existence should be there in the society. So, those organizations are called as business entity. So, business entity means specifically identifiable business enterprise like Kalyan Jewellers, ITC Limited, etc. So, these are the organizations we are familiar about and the society knows about it, and it has some individual existence. I can't imagine a particular organization. So, by giving the example or while giving the example, I can imagine a particular organization. But when we are going to speak about entity in the accounting, so it should have a individual existence. An accounting system is always devised for a specific business entity, also called as accounting entity. So, this entity is nothing but what? Business entity or accounting entity, based on which we are going to ascertain the financial statements of an organization. So, when you hear the word entity in accounting, it's nothing but the organizations which has some individual existence and it should be situated in the society. They are termed as what? Entity. Now, coming to the second term, that is business transactions. Now, here whatever the activities that takes place in the business, it is not termed as an activity in accounting. It is termed as business transactions that can be measured in terms of money. So, transactions is nothing but the activity or events that can be measured in terms of money are called as business transactions. So, a business transaction is an economic activity. So, what do you mean by an economic activity? Where you can get something in return. So, those activity where you get something in return. For example, business is an economic activity because we invest into the business and we conduct various types of activity, but our main intention is what? In order to get the profit. So, our return is what? That is, profit is a return. So, a business transaction is an economic activity of business that changes its financial position. So, of course, when they are going to earn the profit, so it thereby changes the financial position of the business. Now, if you are going to speak about business transaction, so it is an activity which can be measured in terms of money and it is an economic activity. So, we are doing that activity in order to get something in return. So, here business is an economic activity because we get profit in return. So, whenever a business transaction takes place, it results in a change in the value of some of the assets, liabilities, capital. So, here what are the changes? So, whenever we are going to undertake any of the activities in the business, that is business activity, there may be a changes in assets, liabilities and capital of the organization. Transactions can be cash transaction or credit transaction. So, there are mainly two types of business transactions in accounting. They are cash transactions as well as credit transaction. So, the chief features of transaction are it involves an economic activity. So, as I have already told you, what do you mean by an economic activity? The activity which is undertaken in an organization where we get something in return, that is known as economic activity. It does not include social activities, are not considered as transaction. Only economic activity will be considered in the business transaction and not the social activities like social service where we can't get anything in return. So, they are not considered as a business transaction. Only the transaction where we can expect something in return, they are termed as economic entity or economic entity and they comes under business transaction. So, there are, as I have told you, there are two types of transaction. One is cash transaction, other one is credit transaction. Now, what do you mean by cash transaction? Here, whenever the transaction takes place, it may be purchase or sale of goods and services. Okay, so immediately the payment of cash or receiving of cash takes place. Those are termed as what? Cash transaction. Suppose I purchase goods worth rupees 10,000 and I pay the cash immediately. That is cash transaction. Whereas coming to the credit transaction, so these are also a transaction of the business where the payment of cash or receiving of the cash does not take place immediately. They are known as what? Credit transaction. Suppose, for example, I have purchased goods worth rupees 10,000, but I am not going to make the payment immediately. I will take 2 weeks of time, then I am going to make the payment. That is known as what? Credit transaction. If I pay immediately, then it is cash transaction. If I am going to pay in the future, that is known as credit transaction. So, hope you are clear with the business transaction. Now, coming to the third term, that is an account. Now, let us see what is an account. So, we have already learnt about, we have heard the term, that is ledger account. Then, what is the term account? So, an account is a record of all business transaction related to a particular person or an item. So, in journal, we will record all the transactions in the chronological order one by one. After that, we are going to classify those transactions into, or depending upon the nature, we are going to classify those transactions and we are going to place in a particular place. That is known as what? Account. So, an account is a record of all business transaction relating to a particular person or item. Suppose if I am going to record the transaction of A Limited, okay, so all the transactions related to A Limited will be kept in a, or will be placed in a particular place, which is called as what? Account. In accounting, we keep a separate record of each individual asset, liability, expense or income. So, here for each and individual, suppose I have told you about A Limited, then I have to prepare A Limited account. Suppose I have to prepare asset account. So, let us take an example of machinery. So, all the transactions related to machinery will be input or will be put in one account, which is called as machinery account. In the same way, all the transactions relating to cash will be placed in one account, that is cash account. Or all the transactions relating to sales will be placed in one account, that is sales account. So, depending upon the nature, we are going to classify them into a particular place, that is known as what? Account. So, it may be relating to asset, liability, expenses or income. The place where such a record is maintained is termed as account. So, as I have already told you, the place where we are going to classify the items of accounting is called as account. So, all account are divided into two sides. So, you will be having two sides here. So, normally the account will be in the shape of T. So, it will be in the shape of T, where your left side will be the debit side and the right side will be the credit side. So, left side indicates debit side and right side indicates credit side of your account. So, it is in the shape of T. So, as I told you, it has two sides. One is debit side as well as credit side. And the above account resembles English capital letter T. So, here it will be in the shape of T. As such, it is often called as T-shape account. So, it is called as T-shape account because it resembles the alphabet T. An account is abbreviated as A/C. So, how do we record account or how do we write account in accounting? That is A/C. Suppose it is machinery account or if it is cash account, so we will record it as cash A/C, that is cash account. Okay. So, this is how, or this is a term account. So, hope you know about account. So, it is in terms of T where we are going to classify the items into individual thing, that is, or we are going to place into a particular place. So, depending upon the nature, we are going to place them into a particular place, which is called as account, and it will be in the shape of T. So, it is called as T-shape account. Next one is capital. So, this is the next term, capital. Now, what do you mean by an capital? The amount or asset which is invested by the owner into the business is called as what? Capital. Of course, for each and every organization, we need some investment. Correct? So, whatever the initial investment which is being made by the owner, so it not only in the form of cash, it can also be in the form of assets also. So, they are termed as what? Capital. So, it refers to the amount invested. So, the investment which is made by the proprietor in a business enterprise. That is the owner of a business enterprise who is going to invest some amount. So it may be in the form of cash or it may be in the form of asset. So both are termed as what? Capital. Amount may be in the form of cash, goods or any other asset. So those investment can be in the form of cash or in the form of goods or in any form of asset. So there is a formula for capital, that is capital is equal to asset minus liability. So we will call this equation as accounting equation. So what is accounting equation? Capital is equal to asset minus liabilities. So this is about capital. Now coming to the next term, that is drawings. So the investment by the owner is called as what? Capital. So whatever the amount which is been invested, suppose if the owner is in urgent need of money, he can withdraw certain amount for his personal use. So that is known as what? Drawings. So any cash or value of goods, so it may be in the form of cash or it may be in the form of goods withdrawn by the owner. So withdrawn by the owner for personal use. So you have to remember this word. So if it is for official use, then it is not termed as drawings. So it should be withdrawn for his personal use, then only it is termed as drawings. Or any other private payment made out of the business fund are called as drawings. Now what do you mean by drawings? The amount or goods which is withdrawn by the proprietor for his personal use is termed as drawings. So if the amount is invested into the business, then it is known as capital, and if the amount is withdrawn by the owner for his personal use, so you have to remember this word personal use, then it is termed as drawings. Next term is assets. So we are all familiar with assets. Okay, so let us see what is this asset. So anything which is in possession or in the property of a business enterprise, including the amount due it from others, is called as an asset. So asset means what? Anything which has certain value in the business, they are termed as asset. So it is nothing but the possession. So it may be in terms of possession or in terms of property. So it may be property of the business or something that is due to the business from the outsiders. They are also termed as what? Asset. So here what you have to remember, asset means something which has certain value or from which we are going to get benefited in the future. So they are termed as what? Asset. So in other words, anything which will enable a business enterprise to get cash or benefit in the future is termed as asset. So as I have already told you, anything which has certain value or from which in the future we are going to get some benefit. So they are termed as what? Asset. So thus cash and bank balance, stock, furniture, machinery, land and building, bills receivable, money owing by debtors, etc. are all assets. So let us see, there are mainly two types of assets here. So these are all the examples for assets. Now let us see what is the two types of assets. So assets may be classified into following categories. So there are mainly two types, other than there are subtypes also. So coming to the first type here, non-current asset. Now what do I mean by non-current assets? It's nothing but we also called it as fixed asset. So non-current are also called as what? Fixed assets. Now what is this fixed asset? So asset you all know which has certain value or from which we are going to get the benefit in the future. They are termed as what? Assets. So non-current asset refers to those assets which are held for continued use in the business for the purpose of producing goods and services and not meant for sale. Now what do you mean by this fixed asset or non-current asset? So these are the assets which has value in the business and they are fixed in nature, where these assets are not meant for sale. So they are there in the organization for a longer period of time and we are not going to sell those assets, or these are not meant for sale. So they are termed as what? Fixed assets. Now, example for non-current asset or fixed asset are long-term investment. See here the word long-term. In the sense, I have already told you fixed asset is nothing but it is there for a longer period of time where you are not going to or where these assets are not meant for sale in the business. So, they will be there in the business for a longer period of time. So, for example, long-term investment and fixed assets such as land and building, plant and machinery, computer, motor vehicle, furniture, etc. So, if you purchase this asset once, so those assets will be there in the business for a longer period of time. So, unless and until if it is in that position that it has to be sold, then only the asset will be sold. Other than that, this asset will be there in the business for a longer period of time. So, non-current assets are further classified into, let us see what are the further classification of non-current assets. So, the first one is tangible assets. So, what do you mean by this tangible assets? So, these are those assets which can be seen and touched. So, if you see the furniture, of course, it is a non-current asset and it can be seen as well as touched. So, they are termed as what? Tangible assets. In other words, which have a physical existence. So, these assets will have a physical existence such as land and building, plant and machinery, computer, motor vehicle, furniture, stock, cash. So, these are all tangible assets. Now, coming to intangible assets. So, let us see what is this intangible assets. So, intangible assets are those assets which do not have a physical existence. So, it is opposite to tangible assets, where tangible assets can be seen as well as touched, whereas intangible assets cannot be seen as well as touched and thus cannot be seen or felt. Examples are goodwill, patents, copyright, trademarks, computer software and prepaid expenses. Intangible assets are also valuable assets. Of course, these assets will have value, but we cannot see as well as touch these assets. So, it can only be felt, that is like goodwill, patents, trademarks. So, these are the best example for intangible assets. Now, coming to the second type. So, we have learnt about non-current assets. Okay, now coming to the second type. So, we have current assets here. Current assets are those assets which are meant for sale. So, these are not there for a longer period of time in the business, but they are meant for sale in the business, which the management would want to convert into cash within 1 year. So, here these are the assets where the conversion takes place within 1 year. So, these assets can be converted into cash within 1 year. Those assets are termed as what? Current assets. As such, these assets are also termed as short-lived or active assets. Now, what you have to remember under current assets? So, these are the assets which are there in the organization which can be converted into cash within 1 year. So, they are termed as current assets. For example, debtors are expected to be converted into cash within a reasonable short period. In the same way, stock is continuously sold and bills receivable are also converted into cash. So, these are the best examples for current asset. Now, coming to the third type, that is fictitious or nominal assets. So, what do you mean by this? So, here it cannot be realized in the terms of cash. So, they are termed as what? Fictitious or nominal asset. So, fictitious or nominal asset are those assets which cannot be realized into cash, or no further benefit or no future benefit can be obtained from these types of assets. So, they are termed as fictitious or nominal asset. So, such asset include debit balance of profit and loss account and the expenditure not yet written off, such as advertisement expenses, etc. So, these are the examples for nominal asset where we can't expect the benefit in the future and it cannot be converted into cash also. So, these assets are not really assets but are shown on the asset side of the balance sheet for the purpose of transferring them to profit and loss account. So, these are not actually asset but we are going to show in the asset side of the balance sheet, because in order to show or in order to transfer them to profit and loss account at the end. So they are termed as fictitious or nominal assets. So these are all about assets where we have learnt about non-current assets as well as current asset, and the third type is fictitious or nominal asset. So in my next session, I am going to continue with few more terms, that is basic terms in accounting. So let us see what are the basic terms which are used in accounting. So if you are familiar with these terms, then the accounting process will be very easy. So you'll come to know what the meaning of each and every term. So we shall go through that all the basic terms once. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.